Hello, I'm Josh Brown. Welcome to Talk Your Book. I'm here with my firm's CFO and financial advisor, Bill Sweet. And Bill is going to talk to us a little bit about what you need to do before you start a business. Bill's got 4 things that everyone needs to do before they try to start their own venture, and we'll get into that in just a moment. All right. So first of all, Bill, thanks for being on Talk Your Book. I know you have a busy day talking to our clients, etc. But you've given us a lot of advice as we've built the firm. And I know you've given clients advice about various businesses that they're running. I wanted to have you just go through like the most important things that everyone should do before they start their own firm. So number 1, you're saying create a plan. But why is it so important?
So I think the vast majority of folks that start an enterprise, start a business, do not have a cogent plan starting out. Don't think things through about funding, about where they're going, about how big it's going to be.
A written plan, like not just I'm going to start a business, but literally these are the things I need to do financially, mentally, et cetera.
I think it has to be that way because if you don't have that written down and crystallized in thought, it tends to lead to a lot of failure when bumps hit the road, when things don't go as planned. SBA reports about 50% of small businesses fail in the first 2 years. About 1 in 5 in that first year. And so the best thing you can do to avoid that is to think through the obstacles, think through the commitment that it requires to run an enterprise, to start a small business. The sort of prevailing joke is that it takes 5 or 10 years to become an overnight success and be something that everybody's heard of. And I think just being prepared, thinking through the obstacles ahead of time is the most important thing, so you make sure that you don't become a statistic.
Right. So it's great to have an idea, but the main obstacle is you're going to run out of money. That's how they fail.
A lot of times.
They don't fail because it's a bad idea. They sometimes fail because it might be a good idea, but they don't know how to get from A to B, B to C.
And I think generally people underrate the amount of persistence that's required to get it right and be successul. And so that dedication, I think, is absolutely necessary.
All right. So you're saying document everything. And I always see you writing in a book. Like we have morning meetings every Monday. I see you taking notes. Is that part of your process? Is that what you're saying for people?
Yeah, it is. And so I think at our scale, it's different because there's so much electronic notes and everything like that. But like for taxes, if you think about not having the legal documents that you need to be successful is a huge matter. If you have to go before the IRS, an examiner, an agent, legally before the New York State Department of State to prove that your corporate entity is legit and you're not in Donald Trump, Michael Cohen territory or whatever the case may be, that is critical. And not having that documentation can really jump up and bite you. And so documenting everything, really simple stuff. But if you don't have that process and the ability to automate the vast majority of that up front, that tends to lead to the failures that we talked about in segment 1. Okay,
and that's a good segue. So the third thing that everyone needs to do is decide on the structure or the legal structure of the business. So, like, literally, are you an LLC? Are you a sole prop? Are you a partnership? What's the difference? Why do these things matter so much from the outset? Can't they be changed later? You want to get into that a little bit?
Yeah, and so you hit the key point, which is flexibility matters, I think, the most when you're thinking about things up front. A couple of different business entities, sole proprietorship from a legal standpoint, you're doing business as you.
That's the simplest thing. You could be a sole prop like in a day.
It's so easy.
Just say, I am a sole proprietor.
Usually it's just a matter of going to the county courthouse and registering as a DBA or business enterprise. But the taxes are all on you. The legal structure's all on you.
Okay.
If you get sued, that's your skin in the game.
So now let's say it's you and your college roommate. So now you can't be a sole prop. What are you?
Really easy. Partnership agreement. Bill and Josh get together to form Brown and Sweet LLC or whatever the case may be. We're going to sit down, write down, again, back to document, write down what the business agreement is. Who's responsible for filing the taxes? Who's responsible for getting with the Department of State? Right. Who's responsible for archiving, bookkeeping? And if those things aren't identified ahead of time, it can potentially lead, particularly when we talk about money, talk about profits, talk about losses, who's responsible for what, if that's not documented ahead of time, so disagreements happen.
So now you hear people say, we should do this as a C Corp. We should do this as an S Corp. What's the major difference between those two things? Not in general, but for somebody that's about to start a company.
Yeah, so a corporation is a separate legal entity. It's something that's different than the people themselves. A partnership, at 50-50, Josh and Bill, whatever the company is, that's us on us. A corporation's a separate legal structure, whether it's separate tax or not. We're going to talk about taxes in a second. But the primary advantage you have there, forming a corporation or an LLC, is that it's a separate legal entity. And if you do things right, again, document your findings, document your business, document your EIN structure, the whole range, that corporation can be held liable for anything bad that goes wrong, and not you personally. You don't have a client, the IRS, an attorney coming for your house, coming from your car.
Okay, and now an S Corp is a corporation, but it has no shareholders. It's your corporation.
In a way, yes. And
Okay.
so S corporation's a variant of a C Corp, favorable taxation. We'll talk about that in a second. But in general, separate entity, that's probably all you really need to know for the purposes of taxes.
How do you know whether an S Corp or a C Corp is better
So
for your specific situation?
And depends on the tax structure primarily, but a big legal difference between an S Corp and a C Corp. S Corporation needs to be U.S., limited to 100 folks. So it's a little more narrow as far as who can own an S
So
Corporation.
you can't raise equity from more than 100 people with an S Corp.
Correct.
But that's rare anyway, that you're going to be out there selling interest in your business.
Only if you're tremendously successful. And so back to thinking through things ahead of time, if you have a legal entity that can change and alter over time, for example, going from a single member LLC to a S corporation structure is relatively easy to do, but going from an S corporation backwards is not. There's some probably significant tax penalties depending on how things are structured.
Let's get into LLC really quickly before we move on. So I've got an LLC. We launched this firm originally as an LLC. Why is the LLC so popular, and what do people need to know before they decide that's the way I want to do this?
Yeah, the LLC is so popular because it's so flexible. The LLC itself doesn't mean anything from a legal standpoint or a tax
Limited
standpoint.
liability company.
You got it.
Right.
And primarily, the primary advantage there is in the word itself, is that your liability is usually limited to what you contribute. But what's powerful with an LLC is you can elect different tax treatments depending on what type of entity
You could be an LLC paying taxes as a partnership.
Correct.
You could be an LLC paying taxes as what else?
As a C corporation or an S corporation.
Okay.
And that's the big power of it, is that you don't necessarily have to determine these things ahead of time. The default mode of taxation, if you form an LLC, is going to be a single member LLC. And it's a common misconception for tax purposes, which again, we're going to get to in a second. Everything is pass through taxation unless you elect otherwise.
Pass through meaning you're paying the taxes personally, regardless of how the company's set up?
You got it. Exactly the same
Right.
way as if you went out and formed an LLC versus just a sole proprietorship. These are called disregarded for tax purposes. There's no tax advantage.
This is
to
more about the
forming an
legal
LLC.
liability that you have, like if something goes wrong and somebody wants to come after you.
Bingo.
It's not about how you pay your taxes.
Exactly. The tax treatment.
I don't think most people know that. All right, I want to get into the tax. Issue a little bit more, just in terms of like, okay, so let's say I've decided to go into business. I started as a sole proprietorship, and I'm paying taxes as a pass-through, and now things are taking off. And now all of a sudden I have some other people that are going to come into my business with me. So this is the point where I sit down, probably with an attorney, before even an accountant, and say, all right, I'm going to get some other folks involved in my business. This person's going to be a coworker. This person's going to be a partner. Then this person's just going to give us money. They're going to be an investor. Like, this is what you mean by document everything, because you can quickly lose track of who is what to your entity, to your enterprise.
And it's probably much more important not what is said, but what people hear and understand. And that's why
And what they've signed.
Exactly.
Right.
And why having something in writing is so powerful, because you can go back and say, nope, we signed this partnership agreement on August 5th. Here's what it says. There's no ambiguity there.
Okay. Anything else that you want to pass on to folks before they run out and launch a taco stand or a software company or whatever?
Yeah, I think particularly in the new tax code, so 2018 to 2025, there's a big advantage to a pass-through entity in that there's this 20% qualified business deduction that's available for pass-through entities under a certain income limit depending on the industry. And so that's a huge advantage. I think particularly starting out, there's not a lot of reason in my mind for most entities to go all the way forward, form a C corporation, thinking they're going to become Pepsi or thinking they're going to become Warren Buffett at some
You can
point.
always do that later.
Exactly.
Like, relax.
It's a lot easier to scale up from that standpoint than it is to start with a C corporation, then figure out how to unwind it because of all the tax consequences involved. And just to discuss the primary tax difference of the advantage of a pass-through, you're only paying tax once at your own personal level. C corporation, fine, you're a favored tax rate, it's relatively low, but the corporation's going to pay tax every year.
And then you pay yourself a salary and you're getting taxed out of that.
And even if
you pay yourself a profit or whatever.
Exactly. And even if you forego and you just take your income out as dividends, you're paying a dividend tax on that. So that it's that bi-level of taxation. I've seen a lot of businesses, and this isn't a primary reason for failure, but if they get too far ahead of where they're going, if they think, again, they're going to be the next Coca-Cola, they're going to be the next conglomerate, slow down. Form clients, have a plan, build partners.
Have
build
more than 100 people that want to invest. Let's start there.
It's a great problem to have, and then build it up that way. But if you don't know where things are going, if you don't have a plan ahead of time, it becomes very difficult to figure this stuff out on the fly.
All right, listen, Bill Sweet, ladies and gentlemen. Follow Bill Sweet at Bill Sweet on Twitter.
Pretty easy.
And if this has been helpful, go ahead and smash that like button for us. Leave us some feedback. Leave us a comment. Make sure you're subscribed to the channel if you're not already, and tell your friends. We'll be back with you soon.